So my name is Shauna Matkovich from the Forest Link, and I'm an independent investor. No, I'm not an investor, so don't come running to me after the after the panel. No, an independent advisor, and I work with investors, investment managers, and forest businesses on ESG and impact integration into investment strategies and operations. And I'm happy to be here today talking to you about the topic of transitioning from traditional timber to impact forestry. I'm joined by JP Lacanau from FIA, Miriam Billing,
Good.
yeah, okay, and Warren
Kemper.
Kimber from FMO. Okay, we're off to a great start. So why don't I leave it up to them to introduce themselves before we get started?
Great.
JP?
Thank you, Shauna. My name is Juan Pablo Lankenau. Most people call me JP. I'm the Managing Director for International Investments for Forest Investment Associates, FIA. I've been with the firm for 9 years. FIA was one of the pioneers in the mid-1980s when institutional capital moved into the space of timberland investments. And we grew over the last 38 years. We currently manage about $5 billion worth of institutional capital that is deployed across the United States, Brazil, and Chile. We manage approximately 900,000 hectares of traditional plantations. But over the last few years, we have been exploring the evolution of our asset class as we have this new chapter of transitioning from traditional timber to impact investments. And I think this panel today is a great opportunity to share a case study and an experience of how Shauna has helped us explore this transition. And we've been working with the Green Branch and with FMO and other DFIs to see this next evolution in our asset class. So great to be here, and it's an honor to share a panel with such a group of talented individuals.
Thank you.
Hi, my name is Miriam. I'm working for the Green Branch, leading the technical team there. We are a carbon project developer of high impact projects. And as such, we're doing the carbon certification, we're fundraising for our projects, and selling the carbon credits on the voluntary carbon market. And for the implementation and management of our projects, we're working with local operational partners in the forestry sector. And what you've just seen on the video is one of our reforestation projects in the state of Bahia in Brazil that we went to last year together. Very excited for the next trip this year.
Great. I'm Warren Kemper. I'm an investment officer at FMO, the Dutch Development Bank. For those of you around yesterday for the DFR session, we're much the same as the other DFRs that spoke. We sort of state-owned by the Dutch government and have a portfolio now of approximately 13 billion euros in emerging markets only. We target specific SDGs, 8, 10, and 13. Obviously, 13 is very relevant for the climate angle linked to forestry and ag. And within that, in the last sort of 18 months or so, we've worked on developing and refining a forestry strategy with a sort of ambitious goal to deploy up to 1 billion euros in the asset class by 2030. We currently have a portfolio across debt and equity of about 300 million euros, so we've got a bit of room to grow. But it's with partners like FIA that we'll look to deploy that capital. And my role, I'm in the equity team focusing on funds and direct investments in forestry and other sustainable land use.
Excellent, thank you. Maybe as a bit of a warm-up, from the premise that the lexicon around terms like sustainability, ESG, and impact in the context of forest investment has different meanings for different individuals and also from an organizational level, I wonder if each of you could explain to us what impact forestry means to you.
Yeah, no, that's a great question, Shauna. So from my personal perspective, as well as FIA's perspective, I can't help but think about the presentation yesterday by Gwen when traditionally our focus has been maximize returns. We're all about maximizing returns. And since we manage institutional capital, as a fiduciary duty, we have always had sustainability and climate positive attributes as a side benefit of how we engage with the market and how we deploy the capital across the landscape. But over the last few years, we have seen an evolution, a very strong evolution by the market and investors asking for those attributes to no longer be side benefits. They need to jump to the front seat and share the driver to be the key objective alongside financial returns, but also one of our key decision-making processes. So that's what we have been working on over the last few years as we pivot in our strategy to make sure that we select projects that have climate, nature, and the bioeconomy be at the same level of financial returns. So how do we solve for those equations? How do we achieve those goals and targets? Through working with the right capital sources and the right project managers in order to execute on the ground.
Excellent.
Yeah, for me, it's all about creating a healthy and resilient ecosystem and maintaining it in the long term. That also involves inclusion of local communities, looking what is the local environment looking like, what are the native tree species that we could plant, but then finding a project design that also makes it financially viable, because only when it's viable we can create the long-term impact.
Great.
Yeah, I think you guys have explained it well enough already. I'll steal a bit of the lingo from Vera. The way I see it is, it's traditional forestry plus CCB, right? It's this impact lens that steers the management of the asset towards climate goals, community outcomes, and biodiversity enhancement. And I think that's, for me, it's FSC plus. You're just going above and beyond what the industry already does well. And I don't think it needs to be overly complicated, and hopefully we can dig into that, because I think that's one of the bigger issues in this space, is that the impact side, people try and do too much at once. So having a real focus outcome, knowing what you can change, what you can control, is a very important part of the impact story.
That's a very good point. And I think one of the panelists yesterday mentioned that just by operating in a lot of emerging markets, you create impact in any case, if you're operating in a sustainable way. So I also agree with all of you, and I would also add that it's the intention at the beginning, of course, not undermining the financial sustainability of the asset as well. So I want to, we've got it? Yes, I wanted to draw your attention to this as a kind of shift into the impact concept. So this is forestry impact theory of change. So I had the pleasure of working with FIA early in the development of their impact strategy development around nature-based solutions. So part of that, and a key outcome of a workshop that I did with them, was the development of this theory of change, where the team worked together, where we looked to integrate both impact and financial objectives, because I think it's important that we don't see these as siloed outcomes, but that we're looking to carry out one set of activities essentially on the landscape. Of course, there's going to be different parts of them, but we're looking to achieve different types, both financial and impact objectives. So this exercise worked towards getting those all housed in one place so that everyone's on board with the direction that the strategy is going. I like to think of it as kind of a business plan for impact. So how you would look at an investment case, you could instead look at this impact in the same way. So, and I like to work backwards. So where your impact is your long-term objectives, not necessarily measurable, more visionary. Your outcomes are medium-term impacts and more show a general direction where you would like to go, split down, divided by the different impact themes. The outputs would be your measurable results. So what you would actually, when you're developing KPIs around your impact, again, keeping it simple and not overly complicated and trying to, for example, measure against every single SDG. You pick what makes sense to your strategy. And then the activities are what's actually going to generate those outputs, which will eventually lead to the impact. The inputs, of course, are everything that go in to make it happen. So, of course, from the investment capital, but also the experience and the partnerships that you leverage to make it all possible. So I wonder if, JP, you could walk us through this theory of change and set the table, as you will, with those of us on the panel and how everyone fits into FIA's theory of change here.
Sure thing. Thank you, Shauna. And I'm going to do the opposite of you. I'm going to start from left to right. So basically, when we talk about the inputs, one thing that I like about this panel is we have all the inputs here on the panel. So when we talk about finding the right capital, as we evolve as a firm to deploy this impact strategy through the theory of change, then we need to find the right sources of capital like DFIs that are aligned with the values and strategies beyond just maximizing investment returns. This is capital that needs to want to drive this impact in the landscape. Secondly, partnerships. In our almost 40 years of working in this field, we have always prided ourselves on being able to find the right partners to work with, the right project developers, the right operators. And as we've been getting to know the Green Branch, we're convinced that they are the right partner for this type of strategy for our capital to be deployed in Brazil. And then thirdly, ourselves, the expertise, the experience. FIA has a long track record. We have been in Brazil for over 12 years. We have deployed in 3 different regions, and we have the experience of being able to identify the right assets to target, the right strategies to implement, how to validate the investment theses, the old investment thesis, the new investment thesis, but just to make sure that we're able to align capital, partnership, and execution to go beyond just sitting in this panel and talking here today, but be able to come back 10 years from now and report that we had done what we said we were going to do. This is a very local strategy. It requires a lot of work. Miriam and I were joking earlier, we should have come here with our muddy boots to show what the reality of this asset class is. This is very clunky. So we are convinced that as we begin with the right inputs, we have clarity over the activities, no longer just financial return, but we want to impact climate through the production of carbon credits. We want to impact biodiversity through making sure that at least 20% of our areas are targeted for conservation or restoration. We want to target the bioeconomy to make sure that we are a good source, stable source of sustainable forest products that the global economy needs. We go from left to right, from the inputs, activities, outputs, and outcomes to achieve our impact target, which is to expand the climate and nature positive footprint in Latin America. To be very specific, that's where we see ourselves as a firm having the ability to bring about some change, to have an impact.
Excellent, and a great overview. Thank you for that. Warren, coming from the capital side, I wonder if you could explain how at FMO you ensure that an impact strategy is indeed investable and scalable, as the topic, of course, today is not focusing on niche boutique, high impact projects, but really looking to scale impact forestry.
Yep. No, great. I think it's a very pertinent question. So first of all, I think the topic of partners is the right one. We need to work with aligned parties that are in it for the long term, that share values. We have clear alignment throughout that. We want to see development impact. I mean, that's our role as a DFR. But at the same time, we do want return of capital. So trying to find that harmony in the right partner that not only just pays lip service to this, but actually shows it throughout the integration of these topics like impact throughout the entire investment process, the entire investment life cycle, I think is a very important thing for us. I think in terms of how we analyze this, we like to see active TMOs and timberland players that are already active in a landscape, right? For instance, FIA have been doing stuff in Brazil for a long time, primarily on the commercial timber side, right? But they've got scale. They're already, doing conservation activities. They're already interacting with local stakeholders and local communities. How do you just turn that up? How do you just advance that? You're already there. You're not starting from scratch. So I think that's a very important thing when it comes to finding the right partners with relevant track record in a particular region and in a particular strategy. And then to the point, if you don't have, experience with doing native species ARR projects, then find the partners that can do that, right? And bring complementary skills to the table, it's okay to say you don't know or you haven't done this before, but find a partner then that you can work with that can complement you and help you deliver on that strategy. So yeah, I think that's a big thing. And more broadly, the point that I had in my intro was just on impact. I think often the pitch to DFRs is full of headlines, right? It's look how much carbon we're going to sequester and how many lives we're going to change and how many jobs we're going to create. And it's all great, but there has to be substance there. And I've seen pitch decks with 10 different fund level KPIs for impact, and I'm like, how are you guys going to actually do this in practice? Do you know how much work is involved in this over the next 10, 15 years of a fund life, let alone over, hopefully these projects that you develop have an incredibly long lifespan of decades thereafter. How do you ensure that that's you going to have your finger on the pulse throughout? So again, coming down to focus, doing what you're good at, and finding a manager or a sponsor with individual projects that can really give a clear narrative on that, I think is very important for us.
Very good. So meaningful KPIs when it comes to impact and
Definitely.
quality over quantity. Miriam, we talked a lot yesterday about high integrity, high quality, core benefits over co-benefits, and we kind of touched a little bit on pricing of carbon credits in particular. We discussed how those who are wanting to buy the carbon credits they want all these things, but they're not necessarily willing to pay for them. I wonder if you could speak to the fact of how you deliver high quality carbon landscape restoration projects where potentially your overheads are going to be more costly than the alternative strategy. How do you execute this on the ground at scale and in a commercially viable way?
Yeah, so first of all, I want to address the carbon credit price. There's two groups of buyers, the ones that already know that quality comes at a price and that are willing to pay for that as well. And the other group, we still need to educate. It's key that we are transparent and communicate about the efforts that we have and that we're doing on the ground and what it means to create impact. As you also mentioned before, like you need to also focus on the main KPIs, like what can you really do over long term and also maintain that impact. And about the economic viability, the way that we're approaching it in the Bahia project that you've seen before is that we're diversifying revenue streams as well. So we are having a free zones approach. The first one is an agroforestry zone, which is bringing short-term revenue. We're planting, for example, cocoa, which is well established in the region already. We're having a commercial timber zone where we're planting a mix of native and non-native high-quality timber species, which is guaranteeing the long-term revenue. And then combining these two approaches with the third one is the restoration zone, where we're also creating carbon. So combining the first two with the carbon revenue is actually creating a quite robust financial model and is also de-risking the project. Right. And I can also touch upon the scalability. So I think it's key to do a proper regional analysis in the feasibility stage already. So checking what are eligible areas, doing GIS analysis, talking to brokers, doing legal checks, and also securing that you actually can scale when it's time to scale. So having nurseries in place, like our operational partner, they already have a capacity to produce 2 million seedlings per year. So we could, with this capacity at current state, we could already plant 1,500 hectares per year. And then creating an operational regional hub to have all the infrastructure in place and the HR resources to be able to get into action.
Excellent. Yeah. So I think that now we've kind of set the stage for the high level, and we'll leave some questions for a bit later on. I'd like to get into implementation and move into the actual work on the ground that we've been kind of leading up to. So JP, I wanted to ask how FIA evaluates implementing parties, such as Green Branch, to ensure that they are up to the job, so to speak. So this both technically, as we were talking about with the seedlings that can be produced and getting those in the ground, and financially, so the ability to manage the investment capital that you're injecting into the asset.
Right. Well, that's a great question, Shauna. Thank you. And I think it's a very interesting anecdote, the fact that we're sitting here on this panel today when it was 2 years ago in this same conference that we met Miriam and the Green Branch for the first time. So 2 years ago, meeting somebody at a conference and hearing about their project is just the beginning. Miriam, Casper, Jacob, and the team can probably attest to how the last 2 years the two groups have been talking together, exploring together, getting to know each other, and that is just the beginning of how we set the foundation to eventually get to a stage where we are able to align the capital and pull the trigger on an investment. So I would say it's almost like a 3-step process, the way we approach it. The first one is, what is the investment thesis? So once we FIA as a firm defined through the theory of change that we want to target projects that go beyond traditional returns from timberland plantations, we want to target projects that have scale, that produce carbon credits, that target conservation and restoration. Is that a good fit with the project that the Green Branch is promoting? So we've spent 2 years working on the financial model, validating the investment thesis, making sure that we're comfortable with the assumptions, the inputs, the results, the sensitivities. Miriam talked right now about nursery capacity. What's the cost per seedling? Who's going to go and put it in the ground? How much is it going to cost to do the site preparation? There's a lot of different moving parts that go into the initial desktop analysis just to validate if the investment thesis is a good fit or not for our strategy. Then the second step is to actually go out there, like we saw in the video, and validate that it is a viable investment thesis that can be put in the ground. So to this stage, we've done at least 2 or 3 site visits. Our team's going to be with the Green Branch team on the ground in Bahia next week, and we're actually going to be together there in July as well. So a lot of involvement in visiting the region, validating the viability. And then thirdly, and I would say almost the most importantly, is who's going to execute? The Green Branch, this team. This is a very talented group of individuals. We need to get to know each other. We need to trust each other. And eventually, obviously, as we manage institutional capital, there'll be technical steps to take, like background checks and setting up all the investment structure. But for the time being, just working together, and if we're going to be in this thing for 10, 15, 20 years, this is the start of how we validate if this is the right fit for our strategy.
Right. And then Miriam, I would be curious to see your take on that, and in particular, how you meet the investor requirements. So there was some discussion earlier about this mismatch in funding. So the investors coming with their own set of needs, and often in a setup such as this, you would have a capital provider like FMO having their own requirements that trickle down into the likes of FIA that have to screen deals to make sure that they meet these requirements, amongst others. And then it's ultimately the implementers on the ground, like Green Branch, that have to execute all these requirements. So I'm curious, Miriam, if you could give an example of how you meet investor needs while at the same time respecting the needs of what the local context provides.
Yeah, so I think one example is, the stakeholder consultation that we're doing on the ground. I think that's very much aligned with what is also expected from us from investor side. So we're working with the Vera VCS and CCP certification, and the investors, especially when they're coming from traditional timber sector, they're mostly working with FSC. And I think that we are sharing the same objectives in that regard. And I can explain a bit more about our stakeholder consultation approach. So we're really going out on the field, talking to the local people, to the villagers, which have a very, very different life than we do, and also very different needs according to that. And I think that's also what we heard yesterday a lot on the panels, was also that investors want to have projects where the risks are identified and mitigated. And this is exactly what we're doing through this process. We're going out there, we see what the local context is like, and we need to get the communities on board to support our projects to make it sustainable in the long term.
Excellent. And then Warren, looking at it from your perspective, how do you, through the various stages of the investment process, assess both commercial and impact objectives? So from evaluation through to the investment process and then ultimately at exit.
Yeah, I think I like to use the analogy as like you start dating maybe and you need to think about marriage and maybe even, you know, in the legal sense, divorce and or death at some point. Because this is a long-term relationship you're getting into. And I think we've got better in the last few years as we've also developed our own knowledge base internally on the sector. I think very often we would only find out at an on-site DD or maybe even in contracting once we've got our final investment committee approvals that things aren't up to scratch on impact monitoring or certain frameworks aren't in place or there isn't agreement on things like carbon integrity. So I think nowadays we've learned to flush out those topics and have those hard discussions a lot early on in the process. So that's really just during screening, right? We say, listen, these are our ENS standards, right? Like, do you guys respect these? Do you think this is IFC performance standards? We know it's not fit for purpose for large-scale timber plantations necessarily. There are going to be some gaps, but how can we work together to overcome this? Having that kind of transparent, open discussion very early on and building that trust and seeking that alignment is definitely the first stage. I think the other points, once we get through that sort of in principle approval, obviously going to site is a big thing. It's interviewing people on the ground. You know, we'll be joining in July in Bahia, and you know, it's really great to see in person, hopefully not, you know, a show that's put on, but have side discussions away from, you know, the fund managers, the project developers, and really understand the local context, what people really think about, you know, projects and what's happening in the landscape. And then a lot of walkthroughs, a lot of chats to NGOs active in the area, to community leaders, etc., to get a full picture. I think it's a crucial thing. And then lastly, I think as we get to contracting, you know, like most investors, but particularly DFRs, we like to have an environmental and social action plan. And a key part of that when it comes to impact is this topic of trying to manage and mitigate post-exit impact erosion. It's quite a mouthful, but effectively, you know, after 10 years or 15 years that a fund is investing in a project and eventually they need to realize an exit to return capital to capital providers, what happens? How do you preserve that integrity of the impact that you have created and don't just sell out to someone who's going to deforest the land or change the land use? You know, there's various mechanisms. I think, you know, we like to develop a responsible exit plan with a fund manager, sometimes before contracting or shortly thereafter. And it all comes down to transparency and trust and have, you know, if you have a dilemma about, you know, we're thinking about selling out to this party, but we're not quite sure what they're going to do, you know, have those discussions with us early on and so we can steer. We set up governance bodies like, you know, ENS panels that are advisory bodies from investor groups to the fund manager to say, listen, this is how we would handle it. You don't have to take our advice. We're not taking any responsibility. But this is, you know, how we think you could manage it. And having that communication, that active communication throughout the investment life cycle, I think is crucial, particularly in this asset class where you have elevated environmental and social risks. When things go wrong, they can go severely wrong. And I think for a lot of investors like ourselves, you know, managing reputational risk is, particularly in these complex environments with elevated contextual risks, that is priority number one. You know, you cannot create impact if you don't get the basics right. And, you know, the first principle is do no harm. Set the baseline, know what you're dealing with, don't go below that. The only way is up, and preserve that as the sort of key starting point. Yeah.
Very good. Take notes, everybody. JP and Miriam, I'm wondering if we can get practical on the ground, if you could kind of walk us through a what-if scenario, or maybe it's already happened in your 2-year courtship, so to speak. We talked in the theory of change diagram earlier about combining commercial and impact objectives. I would like to know if there's ever a situation where you might have these objectives might be competing with each other, and how you make decisions on the land for what you're actually going to do, if that is the case. How do you optimize your land use, keeping in mind both your financial and your impact objectives?
Yeah, and I think that's a great opportunity for us to discuss. Thank you, Shauna. So you just mentioned the land. I think we should start by focusing on that. The investment thesis here with the Green Branch is to scale up to 10,000 hectares in Bahia to implement this reforestation, agroforestry, and restoration project. We just heard from Miriam the fact that the nursery is set up right now to produce enough seedlings to establish between 1,000 to 1,500 hectares every year with this strategy. So the first decision is, next year we need to plant 1,000 hectares. Where is that land going to come from? Let's say there's one farm that is 1,000 hectares. First decision, can we buy it? Can we lease it? Who owns it? We need to work together. Second decision, soil. What type of soil does that land have? We perform soil analysis. Does it have the productivity and the soil characteristics for us to be able to put the plants on the ground and create a sustainable biological asset that will help us gain the economic and impact attributes that we're looking for? What's the topography of that land? What is the climate trends of the region? What are the rainfall patterns in the past, and how are they evolving over time? So first decision, those first 1,000 hectares, where are they coming from, and how are we accessing them? I don't know if you want to add something.
Yeah, I think it's great explanation. I think it's important to differentiate between we have overarching goals, like around 80% of commercial timber zone and up to 20% of agroforestry, then restoration zones in less accessible areas. But yeah, every farm is different, as JP just said, so we really need to look at it at the farm level. And what I already addressed before, it's so key to have this regional mapping and to have this ongoing, to be ready to scale when we are ready.
Right, okay.
And I would add that as we develop together the investment thesis, and to Warren's comments, we don't expect surprises in this type of conflict, because as we developed the investment thesis, we already know what those trade-offs are going to be. We already know that by implementing a restoration project, the overhead may be more expensive than a traditional plantation. Those are all known facts that we can then go to the field and make sure that we execute, knowing those trade-offs are going to be part of the investment thesis, and knowing that the end result is going to be what we expected.
Right, okay. Miriam, I want to go back a second to talk about the engagements with the communities. And you talked about buying land, leasing land, so maybe you can explain a little bit about how your engagement in land tenure works, and also a little bit about this social engagement. How does that work? Is it you go and kind of like with the public consultation for FSC or something like that, here is the plan, this is what we're going to do? Or is it more of a dialogue and an engagement and a co-design of the project? And does this relate to the type of land tenure that you're working with?
So about land tenure, it's mostly also bigger landowners that we're targeting in the first place, and it's also going to be a mix of buying land and leasing land. But I actually want to just give you one example of a very nice synergy between our project activities and a local initiative that we identified. So the stakeholder consultation process, we're working with a very nice guy who is who knows the social context, is very involved in the region, already worked in ecotourism there. And he found this NGO that is protecting the, wait a second, I'm always saying it wrong, the golden-headed lion tamarin monkey. It's a small monkey species that is endangered. The populations went down by 60% in the past 30 years. And they're having this small reserve there, and they are also doing community engagement workshops with them to inform the community about how important it is to protect the native forest, but they don't have the means to restore the forest. So here we can come into the game, and we can work together with them to reestablish ecological corridors, to connect their habitats, and also to improve the genetic diversity. Of this monkey species. So this NGO is providing us with, hey, like, please look at these areas, like these are priority areas, so we can take that into account. And they tell us, hey, we also know that these species work really well with the monkey, and they have a network of landowners that we can also tap into. So that's just, I think, a very nice example of how, like, us doing this very intense, very in-depth consultation and involvement of local community is actually profiting us. And profiting everybody. It's a win-win situation.
Right. Excellent. Good. I'd like to open up the floor to take a couple of questions if we have any. If not, I definitely have some up my sleeve.
Hi, Joe Meeson, working with AXA IM. Really great panel. A lot of the focus here has been on the supply side, so the challenges of making sustainable timber happen. I was wondering if you might be able to comment on the demand side and whether you think the mass market consumer is demanding for it to go past current FSC standards to something like an FSC plus, or whether we're still operating in a bit of a niche at the moment.
And the question is around the timber side, or?
Yes, so the demand for sustainable timber as opposed to the bare minimum sort of standards that we expect.
Yeah, that's a great question, and definitely demand continues to be for at least FSC certified, but prefers FSC plus sustainable timber. So there is no shortage of demand in any of the regions that we currently operate in, as global consumption of fiber per capita continues to trend upward.
Hi, Agnieszka from Carbon Markets at Equino. Building on a comment from you, Juan Pablo, you mentioned that you try to manage for biodiversity by 20% of restoration and conservation in your areas. I was wondering, and I'm coming purely from a carbon market perspective as opposed to forestry, so probably just my ignorance, but what about the 80% of the more commercial forestry? Are there any trade-offs there, and what does that look like? How difficult it is to actually have the biodiversity in those areas as well?
Yeah, that's another great question. So basically, the way we're building our strategies with this impact objectives, we see us acting in almost like 3 different fronts now. The traditional timber plantation business, which targeted productive areas, but since we're FSC certified and we also manage as good fiduciaries for institutional capital, we did have always the conservation areas as required by standards and by law and by high managing standards. But we now see the opportunity to evolve into also afforestation projects for plantations, as well as pure conservation and restoration projects. So the mix of those 3, we see at least being able to achieve that 20% conservation bucket, most probably higher than that. But we see the complementary aspects of all those 3 asset classes executing together. We have plantations that are very cash rich, cash yielding, and value preserving. And then we have greenfields and restoration projects that are very cash hungry. So they act in tandem one with the other in order to allow us to execute on the strategy of achieving the returns and also delivering on the sustainability aspects and goals.
I just want to add a point, particularly on biodiversity, because we went through a recent investment where this was quite a big topic, and it's sometimes misleading to just look at the number, the percentage of the land use that's set aside, right? Often in some jurisdictions like Brazil, there's a legal requirement, but in other jurisdictions there isn't, and you need to look at the historic land use. You know, has there been deforestation in that area, and what are the remnants left of any kind of natural habitat, right? And what species are supported there. Now, if you look at wider landscape trends in that space, you can say, okay, well, if you didn't put a commercially successful enterprise here that actually continues to support, maybe it's 10, 15% in some jurisdictions, for instance, Paraguay, where there's very little regulation on this type of stuff. You are going above and beyond already from day one to keep those very limited natural habitats there. And they still support what is left of flora and fauna that have been devastated from deforestation over the last few decades. So you start, that's your baseline, and then you can still have net gain at a landscape level in accordance with IFC Performance Standard 6, etc. But just looking at a pure number doesn't necessarily tell the full story, right? So I think that's a little bit of a qualifier I want to add. So it's very nuanced.
Right.
Point.
And we're rounding up on time, so I'll have to cut off the questions for now. But just as kind of a closing remark, we've had a lot of time to kind of discuss the high level and get down into the ground on decision making about where different activities are going to take place. I'd like to go back to the title of the panel today, and that's the transition from traditional timber to scaled impact. And if I originally thought a minute, but now we're running low on time. So if in 30 seconds you could give your main takeaway on how to make this transition, both for investors, investment managers, and project developers or the implementing partner on the ground. How can that be achieved?
Yeah, thank you, Shauna. So for investors, I would definitely invite ourselves and our fellow investors to reflect on the role of what that capital is able to bring to bear. Go beyond just financial returns. That capital can be a great catalyst to bring these other impact objectives, to make them a reality that add a lot of value to the world. As investment managers, just like we went through the process of existentially asking ourselves, what's our role in the future for the next 40 years? What skill set have we developed in our industry that we can also bring to bear in the impact strategies? And that's how we decide to evolve. So I would say those are my two invitations to investors and investment managers to evolve into the next 40, 50, 100 years of our industry.
Thank you. Miriam?
Yeah, I would like to encourage everybody here to be open to alternative forest designs other than monocultures. They are out there, like our project here. They are financially viable. So let's join forces and fight the climate and biodiversity crisis together.
Great. Yeah, mine I'll keep simple. I think from the investor side, for the non-DFIs, it's patience and knowledge building and knowledge sharing. You know, disseminate what's happening. It's complicated stuff, right? There's a lot to digest. And people will only invest once they understand better. I think for fund managers, it's focus on your strengths and find the right partners. And for companies themselves, I think consistent feedback, open to criticism, continue to pivot, especially in the early days. You know, these sort of staged models that can be scaled over time. You know, start small and work together again with a fund manager or an investor that shares a long-term vision with you, and you can sort of provide you capital at every step of the way and guidance for the long term. So that's what I'd like to see.
Excellent. Well, let's thank our panelists for an excellent discussion.